Good evening, everyone. Welcome, and thank you once again for joining us to this important conversation named The Perfect Gift of Life for Your Child's Future. How and Are You Well can build a strong financial foundation for the next generation. As parents, one of the greatest gifts we can give to our children is a strong and life startup. So the more we start these kids or these children on a stronger ground, they are going to grow out to be responsible, financially stable adults. So beyond love, care, and education, we also have the opportunity to build a strong foundation that can support their future goals, protect their dreams, and create long-lasting opportunities for the years to come. So this evening, we have the opportunity to explore how an index universal life insurance can help serve as a valuable tool to build long-lasting financial security for our next generation. We will discuss how this strategy can help families look beyond today and prepare intentionally for tomorrow. So it is always a pleasure to be here to learn with you, our community, our families, our friends. Myself speaking, my name is Immaculate Busingye. I am a financial professional. I'm always excited to be here to learn with you, to explore more opportunities for us to get better financially. So tonight, I'm pleased to introduce our speaker, Henriette Mutegwaraba, who will share valuable insights on this powerful topic and help us better understand how and Are You Well can play a meaningful role in our children's future. Henriette, the floor is yours. Take it on, please.
Thank you so much, Immaculate, again for these gatherings. I really take this as an opportunity for me to learn about the people that we serve, because when it comes to life insurance or the job that we do as an insurance agent, it's more than setting a policy. It's about, taking care of our communities, helping them to learn, to know, because not everybody in this country actually. If you know me, I like statistics. Not everybody knows about insurance, life insurance, or protection. Even for those who were born here, study shows that only 52% of Americans have any type of policy, and mainly the policies, even those who have policies, most of them, they are group of policies that you get through a job. And most of the time, people don't even ask questions. They don't even know that they have it. So today we're going to look, is it because we're not fully educated about life insurance and how it can benefit to our families and future generation? So today, that in these few minutes that we have, we are going to see the benefits of IUL. It can also serve as a place where you can put your money as investment, because when we look at those kind of insurance, especially the IUL, Index Universal Life Insurance, the money you put in the investment in this IUL life insurance, it's not investment, it's life insurance. A percentage of that money is invested in the stock market, which means it's going to earn you some money. At the same time, you have a protection. So if you have a 1 million protection, doesn't have to be 1 million. So I think in the previous presentation we did, we made it clear that not every family needs 1 million or 2 million. Every family is different. Every family needs is different. So that money, you are protected. You're putting the money there, which we call a premium. Say that for 300,000, because maybe that's what a family needs. And if in case something happened to you, your family can get that money tax-free, cover your home, cover the bills, or maybe help the family to live the same lifestyle for 2 months or 3 months. But also by the time, say that you leave that money in for 20 years, 50 years, that money is not going to be 350,000. The money is going to be more because it is invested in stock market. It's making you some return. and with the guarantee that you will never lose money, versus when you have money in other stock and market investment, when the stock goes down, the market goes down, you lose money. This one, it comes with the protection that whatever happened to the market, at least you are going to earn 0.25% of your money. So you're not losing any money. But anyway, that's a little bit about life insurance. And let's now jump to juvenile life insurance. So there is a benefit of getting a life insurance for your children when they're still young. I am not gonna probably list all of them, but I'm gonna just, share some of the benefits. Number one benefits that I see really is like you getting a protection, because we all need the protection, because I know if something can happen. Um, you're also starting at an early age where when the policy that you buy is going to be cheaper for you. For those who are familiar with life insurance, or those who are not familiar with the life insurance, the older you get, the policy, the money you pay for your policy is going to be more expensive. For example, if a 20 years old get life insurance for 500,000, and a 50 years old, they want the same policy, they're probably going to pay triple to what the young person is going to pay. So when you get your little child, your little um, um, kids, or when they are born, and whatever, when it's time to get insurance for them, you're paying less. uh, they are at that point where you never know, you never know what is going to happen. The other thing that I like to share is life insurance is not guaranteed. Means like 5 years from now, if you end up getting sick, anything can happen in a life. You end up getting sick. You're probably not going to get approved. But if when you go in at that young age, you don't have anything really that can come up where they can say denied. Although that sometimes people can, be born with some sickness that we know that, but it's always important to get in early. The other thing is you're saving more. So if you get in when you're young, you have the opportunity to leave that money there for 30 years, 50 years. It's making you more money. When it's time to go to college, maybe your money have made you enough money to get some of those funds and use it for college or buy your first car. Maybe your kids are not going to go to college. Don't everybody go to college. They may grow up and end up saying, no, I don't go to college. I'm going to just find a job, Starbucks, where. But by the time they make those decisions, they have already made a lot of money. For example, I give you example. I did a policy a few days back for a little boy who was 2 years old. And the way it was looking was like, if that is the money, the family is like, we wanted to invest this money. This is our only child. We wanted to put this much money every year, because you can do it every year. And it was looking like by the time of retirement, this 2 years old will have, I can't remember very well about it, but it was more than $1 million that he can get that money and do whatever they want. Is it a house, or you just wanted to retire early? So those are the benefits, some of the really good benefits to start these policies. If you can afford, just put a little bit of money for your little baby or the kid, whatever age they are. You can always increase, like we always say, don't do what you can afford for now, because the good thing about this life insurance is you can always upgrade. You can always put some money in there, but start from now. Get in from now, and then in the future you can add more money as you go. Um, uh, let's go to the next slide, and then so I think I say that some of it, the cost of insurance when you're young is cheaper for you because of the age. Age is very important when it comes to life insurance. So it's really very important that we try to. And the other thing is, by the way, you don't have to buy it for your child. Maybe you're a grandma or a grandpa. You have a grandchildren that you need to help them start their life from, at the young age. You can put that money there. Is it $5 a day? How much money? $5 can it be in the 30 days, and put that money there so that they are starting to learn about finances. They are saving. Their life is really financial. They are going to be financially free at the time they reach 50 or 60. And that's why some families, like the statistics I was reading here, that why people do that to their family, to their kids. Um, the moment they get that social security number, the very first thing they do is to start life insurance for their children. And we can do the same. We can do the same. We can do the same. Um, Low initial premium. So if you don't, some people who never been here before, when we talk the premium, maybe we need to be explaining about terms that the premium is the money you pay every month, how much money you put in every month. So there is a you can choose to put money, pay every month, monthly, or you can choose to pay every 12 months, which is going to be the money you pay monthly times 12, and then that's what you can choose. So a lot of family that I have seen now, especially those who do not have a lot of money. If you know a lot of immigrants, people they don't have a lot of money. This is a time where everybody's receiving tax money, and I have seen families really using that money specifically for the IUL for the children, because they've been working, they're making some money somewhere else, and then they're like, you know what? Let this money just be for this kid, because it is their money anyway. It is their money that you are receiving. So very, very important, and very affordable when you do it that way. So maximize the benefits. It's very important. Um, yeah, let's go to the next slide. And by the way, we're gonna have time to ask questions. I know that sometime I talk first, and I know that we have our friend who is American. I don't know if you have one or two. Maybe she's having a trouble to understand my accent. Just to remember that I learned English when I was old, really old. I don't even want to tell you how old I was writing my first sentence in English. So bear with me. Um, so this is how the money grows. I think I shared about this a little bit. When you put the money in IUL, your money is growing. The premium you're putting every month, it grows, it makes you some money, and that money will make you more money. So it's a compounding interest on what you're making. And the other thing is, when it's time to need that money, you need it for something, or if something happened to you, even though we don't focus on where you say that maybe if you pass your family, your parents can take this money, because in our minds, as parents, I'm a parent as well, you don't think that your children can pass. There's a possibility that your children can pass away before you. We always think that there is this belief that your mother, your father, your grandparents will pass away before you, and you're gonna follow. And there is no formula for that. Sometimes um, parents lose their children, and if something happened like that, the family will receive that money tax free. And I spoke about this a little bit, the growth potential, you never lose money, due to the down market. That means if the market goes down, so when we fund IUL for you, we make sure that we give you the opportunity to choose where your money is gonna be. Um, we do indexing, so you can choose where your money is going to be invested. So when the market goes down, for those who have 401k, you have seen what happened when the market goes down. You look on your 401k, I have one here because I have 401k as well, and you see how the money goes down. But with IUL, you will never lose your money. That's the protection that I was talking about. 2 point 0.25%. You will still earn something. It's different than going down where you can lose with a lot of money. And that's a good thing about you. Know that all this money you're putting in there for your child or for yourself, by the way, that you're not gonna lose it. No matter what happened to market, you will always earn something. And really, there are people who lose a lot of money in the stock market, a lot of money. If you talk to a lot of people who invest a lot of money, people lose millions. People lose a lot of money in investment. But when you put money in IOL, your money is secured. You will never lose it. So tax advantage income, uh, so you, because when you, the money you put in the IUL, you have already paid tax on it. It's like Roth IRA. So that's why when it's time to withdraw the money, if you need the money, you don't have to pay uh, taxes on it. If you pass away, something happened to you, you pass away, your family will get that money tax free because you have already paid taxes on the money you put on your IUL. That's another good thing that you know that you're not gonna pay taxes on 1 million or 5 million, whatever policy that you can decide to choose. So the IUL comes what we call critical illness, chronic illness, terminal illness. So means that money you put in your IUL, you don't have to pass away for your family to get that money and use it for themselves. Say that you end up getting sick and your doctor write this note and say that this is critical. You have access to that money. There's a percentage of that money you can withdraw and use it to help yourself. Chronic illness, it comes with this, right? The chronic illness, terminal illness, and critical illness as well. So that's very good. Many years ago, life insurance was only when something happened, when you pass away, and then your family will get money. But this is really good because you never know what happened. You never know what happened when you in the 60s. So if when you're 20s and young, you don't know. You don't know. We don't know. Life is a book that it's like a new book that nobody have ever opened it. So you never know what it can brings to you. So this life insurance, I will either for the grown-ups or for the kids, it comes with this terminal illness, critical illness, and chronic illness. In case something like this happened to you, you can withdraw that money and you can use it. And that's really, I think this is really great. So a lot of families, they have what they call college savings plan 529. This is a savings only specifically for college that a lot of parents, or some parents, not even a lot, because I haven't done any research on this, but some parents put money somewhere in this fund specifically for college. This is only specifically for college. If you get sick, you're not gonna go and get a little bit of money to buy medication for your kids. If you're hungry, you're not gonna be able to go and get it. If you lose a job, you cannot. This is only specifically for your kids. These funds say that you wanted to go to college and you wanted to apply for financial aid. The financial aid guy is gonna look at this and say, wait a moment, her parents or his parents have much money in this fund. Then guess what? You're not gonna be qualified for this. Versus when you go to IWL does not count against you when it's time to apply for financial aid. So that's how I think, in my opinion, that IWL is way better than this. 5219. IWL is it's coming with those rider, chronical terminal illness. You can withdraw the money and buy your new car if you have enough money. You can, if you live in there for years, you can get that money, use it to buy your first house if it's a lot of money, or just even a little bit of down payment for your home. Versus this one is specifically only for college, because when we talk about juvenile insurance, life insurance, some parents ask you, tells you that, oh, I have actually some money in this fund, the 529, the college saving plan. Um, so I just wanted to make clear that there are two different things and they serve different purpose. In my opinion, I will always do IOL for my kids versus putting money in a 529. So I think it's the same thing that I say. So why get a life insurance? So you're giving your children a financial head start. So you are making sure that they're going to be financially, you're empowering them. You're making sure that uh, they will be safe financially, they will be empowered, they will have some money either for school, either for even for buying a home, if they don't want to go to college, buying their first new car, and you know that if they end up getting sick, chronic or terminal, they can use that money. Uh, it's growth. So you know the money is growing. It's invested in stock and markets. If you doing a policy for 1 million, 20 years, 30 years from now, it's not gonna be just 1 million. It's gonna be 1 million plus the money that you earned, the interest that was earned in the stock market, uh, tax free. So it means if you withdraw the money, you are paying zero taxes to the money from your policies. I wanted to thank you so much. And this is the end of our presentation, but it's not really the end. I wanted to feel free to ask questions. Um, and let me see how much, yeah, we still have a time. Please ask questions. Please ask questions. Feel free. We are not, no, there's no dumb question here. We are not judging each other. We are all learning from one another as a family and the community. We are trying to catch up. We are trying to close the gap because there is really a huge gap on when it comes to life insurance, specifically between, when it comes to specifically for juvenile life insurance. Thank you so much, guys.
Thank you so very much for that great presentation. That was beautifully done. Like you said, most of us parents, when we think about life insurance, we think about adults because we're like, hey, I have a home, I have to pay for that home, I have, bills, but we don't think that our children actually they can start off on a better footing. So the earlier they start, like we say, like you beautifully said it, there is no guarantee. Even for the child who just got born like a week ago, there is no guarantee that after 1 year, 2 years, they can be insurable. There's this thing, the big thing they call the insurability in life insurance, whereby you get hit with any critical, terminal, or anything, and you cannot actually get it even if you wanted it. So we want to make sure as early as our kids can, they are able to actually grab that, because when you get in and get approved, they call it, you lock in your age, you lock in your health, you lock in your premium. None of that is going to change for the rest of your life. Because like our beautiful speaker says here, the index universal life insurance covers you up to 120 years. So imagine that if you put your child who is 2, 5, 10, 18, until they're 100 years old, even if something was to come later, nothing is going to affect them. And we all know the cost of education is getting crazy expensive. And we're not privileged enough to have a lot of money saved aside for our children. But we put $100, $200, it is going to be easier for my child, for your son, for your daughter, to be able to grab 50,000, 100,000 out of their IUL to be able to go to college, so that you save them the hassle of student loans. Some of us who went to school here and grabbed those student loans, we are still paying them. So we don't want to leave that bad legacy on our children. We want to make sure that at least we are holding a torch for them. So when they get there, they don't have to suffer. At least they know my job is to get those good grades and be a better human being in life without having to have a burden of those students' loans, or even if you're lucky and your child is smart, they can buy their first home without having to get a loan, or at least they put down their down payments. That is actually very good, Harriet. Thank you so much for that. I saw actually Nema had put her hand up. Nema, you can open your mic and actually ask your question or put something on. Thank you, Harriet. That was very good.
Oh,
You're welcome.
thank you so much for the presentation. And since we were covering juvenile policies, the only thing that kept coming on my mind was the living benefits. Do they also receive all the chronicle terminal riders, or they
Yeah,
have to be 18?
they do actually. I think I talk a little bit about it. So that the IRA for juvenile comes with those riders as well.
Okay, thank you.
So someone sent something in the chat
It
for you.
says, can you withdraw your money from IUL for vacations? Teenagers ask these questions as living benefits.
That's
Yeah.
what I said.
So
Yeah.
Regina, yes. So actually that was the flexibility of an index universal life insurance compared to other savings, like maybe the college fund or 529. So your index account money, as long as you have your cash in there, you can use it for absolutely anything you want.
Anything.
It
Yeah.
could be a vacation. It could be a down payment for your home. It could be buying your child a car. It could be anything you want. It could be you buying yourself whatever you want to buy that you didn't buy from the previous time. So that money is very, very flexible. It's actually liquid. It's there. It is yours. You don't even have to retire before you can take it out. Anytime you have it, you can take it. It's like I like to tell my people that it's like a bank broker, like some account somewhere that you can actually touch in. It's like your savings account somewhere in your life
It
insurance.
is. And it's yeah. I wanted to ask for Olivia, I wanted to answer your question as you say, how much does a typical IL cost? So the cost of that's why we do what we call Olivia, we do what we call client analysis. We cannot just say that oh the IUL is 500 a month or 200, whatever. So we need to schedule a meeting and then get to know you, get to know your family, get to know what you need, what you can afford, what is the reason we have to do all of that because we have to do numbers and see exactly what you need. We cannot just give you a number for IUL. It's what you can afford. It's also what you wanted to protect. Do you have, for example, let me give you an example. If a family that have a house for 200 and they have a car loan for 50, 100, that's 250. They have credit card loan for 100. How many? Help me with the numbers. So all of that money, we add it up. We can add that up and then we figure out, and then we ask you, if something happened to you, this policy can cover this, but also not necessarily, because what if you have all that added up, you have 1 million, but you cannot afford, IUL for 1 million. So we need to also look into how much you can afford, and we want you to be uh, paying something that you can afford, so that if you pay the 500 you pay every month or 200, whatever, you still have money to buy bread for your children. You still have money to buy that dress you like. You still have money to buy gas and take that vacation as well, because the money from IOL, you don't just withdraw it the next month you put in. Like we said, is invested in the stock market, so it's not gonna make you money right away. It takes time for that money to grow. The protection is always there. If it's 1 million protection and you end up passing away, your family will receive that million. That is a fact, that is a guarantee. But the investment part of it, the money that it adds to what you put in for the protection, it takes some time for the money to grow. So please feel free to contact me or Immaculate. We have a phone number over there. We can scheduled meeting. It's free. We don't charge you. We just love to share the knowledge, and we love to serve in the community, see what our communities, and see what the people can afford.
Great, great, great. So actually, Gina, some people have this myth that life insurance is expensive. Oh, index universal life is very expensive. There's no such a thing as an expensive, because we always tell people your life is more expensive than anything else that you ever owned or you ever own. So again, like we put in there, like our beautiful speaker said here, it's all about your need, your financial need, and your affordability. That's it. So anything, any money you have, it can afford you what you need. So, and again, like as the speaker said, the IUL particularly, the Index Universal Life Insurance particularly, they are very flexible. You can start low. Today, you can start paying $200. Next year or 2 years, you make it $1,000, or you make it $500, or you can even start higher. If your financials becomes not stable, you can actually reduce it. So it's that flexible. So never wait saying that I'm waiting for, to be able to get $1,000 to pay every month. Get what you can afford now. When actually your finances gets better, you can increase it as much as you want. Perfect. Thank you.
Hello. Thank you, Henriette, Immaculate, for the great discussions here.
Thank you,
This is Roy. Yes.
Welcome.
Thank you. Thank you. Well, very well put. And what I noted is the choice between the 529 plan and the Juvenile Index Universal Life Policy. The choice between the two depends on whether your priority is maximizing growth for education or having ultimate flexibility for any life goals. So the 529, as Henriette well put it, is specific for the education, while the juvenile gives us the whole range of life goals, both education as well as having that nest for the children. If your child decides not to go to school, you still can have it. And one of the other restrictions that the 529 has is it is really state-based, based on your state. You move out of state, out of Texas, it may not, and your child wants to go to Florida, wants to go elsewhere, it may not apply. So that's one of the major differences that we have to look at. While the juvenile, you can use it everywhere. You can use it for any other child, which the 529 is specific to a specific child in a specific child's social security number. Then also the 529, it has the exposure to drop in the market, which the IUL has the floor. So it doesn't drop to prevent loss. And all these are good benefits that you highlighted. Great people. Thank you.
Thank you, Roy, for your contribution too.
I believe, like we always educate. They say education is power for a reason. Every time we come here, you might have a language barrier, like Harriet said, but we are always here. We speak different languages for sure. If you feel like there's something you would have loved to ask questions, but you're not sure exactly how to, you have the flyer. You have our numbers. We are ready to break it down the way you want in your language, whichever language you speak. We will try to go there with you. And something else, let us always remember, start somewhere, make a step. Because we always say, I'll do it tomorrow, I'll do it next year. When the money is more, this is tax season, or this. So we always actually move the schedules for getting those policies for ourselves or our children. This is a tax season whereby we are getting those tax credits, those money for the children. What do we do with it? When the government gives you back those checks for the children, can you at least take some percentage and put something down on side for your child? This is a better time. This is the money you had possibly not planned for it. So this is the best time you can decide to say, I'm giving back something for my children because this money I am getting possibly comes from them. That is the head start we're talking about. That is starting planting a seed today. It does not have to be $1,000. Start the way you can manage it today, but do something. And possibly next year you can actually add more money. I've had parents actually this tax season who have been putting actually a lump sum towards their children's IULs. They had started with $100, but now they're like, hey, I received maybe a little more money. Can I add? Yes, you can always go back in and add some money for the savings for your children. The only important thing you have to think about, make a step, do something. That protection is very important. We don't have to actually be blindfolded saying that, oh, my children are young, nothing will happen. We have teenagers who drive. Something can happen. And when something happens and they lose insurability, you're going to be crying, had I known. We have to learn how to be proactive instead of always being reactive, saying that I wish I knew. You don't have to wish to know, you know now. So do something and then learn on that or increase on that. I think someone sent something here. What happened to the kids' policies when the parents pass? That is a good question, Nema. So when the parents, I don't know if you mean two parents, because normally the juveniles, anybody 18 years of age below, the parents are the policy owners. The the juveniles are the policy holders, but the parents are the policy owners. So let me say you have a child, you have two parents, it is not common to have both mom and dad die,
At the
but
same
even if
time.
at the same time, and that is why most of the time when we do those policies, we put the primary beneficiaries and actual secondary the secondary beneficiary just in case something happens. So if something happens to one child, one parent, it's not going to happen also to the, the secondary beneficiaries. And the beauty of these IULs, they have cash in there. I've had clients who have been in maybe for 3, 4, 5 years, and now they are actually hit by a financial crisis and they're not able to pay. Their IULs can even pay for them for a year or two without having to do anything. So we always have those, yeah. So I don't see the reason if something did happen like that. Those children, they do have someone who can actually follow up because they have the information there. The primary is not there, the secondary is there. So, and depending on the children's age as well, the money might keep there until they are 18. And because they have that cash accumulation, the policy might still actually being paid until they turn 18 and they are able to go in and reclaim their either their payments or even their accounts as well, depending on that is something that depending on how that happened.
And I wanted to add a little bit to what Immaculate said, well said. I wanted to add that once the child turns 18 or they started their first job, since they join in when they are very young, it's really affordable to the point where even your child is working. I always say Starbucks because I love Starbucks. They can afford the $100 or $200. Even if they don't go to college, you can, by the time they're 18, they need to be responsible, or 20. If you wanted to help them until they're 20, they finish college, that's fine. But you can transfer, it's going to get to the point where you give it to them so they can start paying that. So a parent doesn't have to keep paying until their kids are 50 years old or whatever, right? So you're teaching your kids to be responsible. It's very important that you give it to them. So they're gonna start paying that IUL. It's affordable for them. You're gonna say, hey, when you were young, this is what I did, this is what I started, this is how much money have now you have to take off. So they're gonna have to be the one carry on and pay that money because it's not a lot. And I guarantee you, if that child is see it and see how much they are going to make when they are 50, 40, oh, they're gonna jump on it. I'm telling you, they're gonna be the happiest baby in the world. Yeah, thank you guys. Thank you so much. We really care about you. Let's do this together. Let's learn together. Let's get these policies for. And if you're not ready to do it, invite your friends. It's very important that we share this information. Information is very important that we need to be sharing information with other people. We need to be sharing this information with the people. If you're not gonna do it, maybe you're not ready to do it, but share with somebody who may have that money to protect their family and their children.
All right. Thank you once again, everyone. It's always a pleasure to be here with you. We learn together. We learn from you. So yeah, keep up. Keep the link. Same time, same place. Meet next week. Have a good evening, everyone.